That it is 6 o'clock. We will begin the formal board meeting for January 25th, 2018. I will call this meeting to order, and we will start the meeting with the Pledge of Allegiance.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Just a little note before we begin that she tells me that the audio system in the room is not working, but the audio system is working for the microphones and we're being recorded. So just make sure that you speak into the microphones. Roll call. All members are present with the exception of Stacy Worrell and Lee Shimmick. So we have to appoint, since the clerk and the treasurer are not here this evening, we have to appoint both a clerk pro tem and a treasurer pro tem for signing of the bond document. So to begin with, I would like to nominate Melissa as the clerk for this evening. Do I have a second?
Second.
By Todd. All those in favor signify by saying aye.
Aye.
All those opposed? That passes 5-0. And do I have a nomination for treasurer pro tem for this evening?
I nominate Mary.
I have a nomination for Mary. Do I have a second?
Second.
Second from Ben. Any questions, comments? Seeing none, all those in favor signify by saying aye.
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 That passes 5-0. On business tonight, we have the approval of the resolution for awarding the sale of general obligation school building bonds, Series 2018. Do I have should I present first or should I have the motion first? Why don't I have the motion first to accept for the resolution for the awarding of the sale of the general obligation school building bonds,
So moved.
Series by Mary. Do I have a second?
Second.
By Todd. All right, with that, I will bring Gary from Ehlers up.
Good evening. It's a pleasure to be here. I haven't had a chance to be here since you had the successful election, so I want to congratulate you on getting voter approval from your residents of the district. So that's a great thing. And also, I'd like to say we're very happy about the bond sales, and congratulations on getting very good results on those as well. This first issue is what we call the regular current coupon bonds. That's the 2018 A bonds. We went through a process with rating agency process with Moody's, and Terry and Julie Sink were both on the phone for about an hour. Long discussions about your district and all the good things that are happening here and the growth in students and growth in tax base and all those things. And they maintained your underlying rating at a AA2, which is a very high rating. There's not very many school districts that are in either the AA1 or AAA category. So that's very impressive that you stayed at that level. Especially, there's a couple things that tend to have a little bit of a downward pressure that you overcame, and one of them is as your debt burden grows, in a growing district, it gets tough because you need to build the buildings, and they monitor that debt, and as you add additional debt, sometimes they get a little bit worried about that. The other thing is pension liability, and that's something that's well beyond your control, but we hear this with all Minnesota school districts. Both the PERA and TRA pensions, according to a lot of people, are not fully funded in terms of being able to continue to pay out forever. The actuaries say that there's not enough money there, and so that has a tendency to put some pressure on this too. But even with those things going against you a little bit, you still were able to maintain that AA2 rating, which is very, very good. We did get 6 bids. We're very happy about that. We always want to see at least 3, and we got 6 bids that said there's a lot of interest in your bonds. The low bid came from Morgan Stanley out of New York at 3.17. And the highest bid was 3.24. So all the bids were below what we had projected, ahead of the election. So that's a good thing. Because we got a premium, we were able to change the size of the bond issue a little bit and adjust the bond amount from what was advertised in the official statement at 65 million down to 64,715,000. So that's another good thing. It helps with the premium, helped reduce that. So when we look at the interest rates, and the true interest cost at the 3.1695 is substantially lower than the 3.69 that was used in the presale report a month ago. So we're very happy with the interest rates. And what that means, when you look at this bond issue and the other one together, the whole 110 million, the estimated the taxes that are going to be due are $13.45 million less. And that's right on the, if you have your presale report up on your screen, you see that's right on that first page. So that's a great thing. It's even 9.56 million less than what we had in the presale, but so that's saving your taxpayers $13.45 million over the 20 years. So that's great news for your taxpayers. If you go back in a couple pages, you can see, you'll see that the summary of all 6 bids we got came from Morgan Stanley from New York was the best, Bank of America out of New York, Wells Fargo out of Charlotte, Piper Jaffray out of Minneapolis, Baird out of Milwaukee, and JP Morgan out of New York as well. So you got a lot of interest from some big companies out of New York and around this country. So that says good things about your district in terms of people thought your bonds were well worth buying and that they could turn around and sell them to investors. So that's a good thing. The next couple pages kind of are a summary of just this one bond issue, and they show where the money comes from and where the money goes on attachments page 3. And on attachments page 4, you'll see the actual schedule of the bond payments, the interest payments, the principal payments, interest starting on 8/1/2018, and principal in 2031 through 2038. Remember that you are paying some principal earlier than that, but that's in the second issue in the CABS issue. So if you look at the next page, it's kind of a nice combination showing the capital appreciation bonds and the current coupon bonds. Total bond amount of $108,326,000. The voters had authorized $110,310,000, but we were able to get you the same amount for your construction fund because of the premiums and lower interest rates. Get the same amount for your construction fund by selling less bonds, which is obviously another good thing. You're still going to have if you look down under net available for project costs, $110,568,000. So I think we're good there. I think originally we had a number like $110,300,000 or something like that. So you're covering all the bases on that. The next page is what we call our debt plan, and that shows all the new bonds and all your old bonds and how everything all fits together. A lot of numbers on that in small fonts. Probably the next page is a little easier to follow, and that's taking that and showing those tax rates as in bar graph form. The red bars here are your existing debt. Dark ones here are your lease levy, and the biggest one there is the lease you did for the high school a few years ago. And then on the top is the proposed new debt, and you can see it's structured like we had talked about ahead of the schedule, where you have level debt for 5 years, and we have a little bit of a drop where you might need some additional lease authority, and then another drop after 5 years and another drop after 5 years, which will give you some opportunity to issue some new bonds without huge tax impacts from those bonds as well. And on the next page is the tax impact, and again, this is a tax impact of both bond issues combined. It's under where we had projected it every year. The first year we had to set that levy, remember, in December before we had sold the bonds. We had an estimate there. We didn't know exactly what it was be, so we had to lock into that one. But actually every year from now on, the taxes are projected to be less than what we had projected in the presale report. So that's all. And again, that's that $13.54 million that we're saving over the term of the bonds. And the last couple pages here on this one are relating to the Moody's investors. And they changed their stuff this time around. They actually issued two different reports. One is called a credit, one is just a rating action report, and then the other, or credit letter, and then the second one is an opinion, which goes on to, looks more like what they used to be. And again, the things they offer as strengths are your large affluent tax base in the metro area and your growing enrollment are keys that they think, as well as sound financial management and some of those kinds of things. But you can read through that, and like I say, there are not very many districts that are at that AA2 credit rating in the state of Minnesota. So that's a very high rating. So that's a good thing, and that helps, obviously, the higher your rating, just like a FICO score. You know, you get the higher your rating, typically the lower interest you're gonna pay on your debt. So that's the first issue. If you have any questions.
Any questions? Are there any questions for Gary?
That's the first issue.
It's the
So we're
first
gonna go
issue,
to
yeah.
the other one. Okay.
Are there any issues or questions or comments? Seeing none, this is a resolution for the approval of the awarding of the sale of the general obligation bonds, general obligation school building bonds, Series 2018A. So, there's a resolution. Ben?
Aye.
Melissa? Aye.
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 That passes 5-0. All right, next is the approval of the resolution for awarding the sale of general obligation building bonds, Series 2018B, the capital appreciation bonds. Do I have a motion for the acceptance of this resolution?
So moved.
By Ben, do I have a second?
Second.
By Todd. Again,
Okay.
we'll hand it off to
And
you.
there is a second pre-sale report. This one's a lot shorter because a lot of the stuff in the first pre-sale report kind of covered both issues in terms of the combined tax impact and dollar amounts available and for construction and those kinds of things. I want to say there was a little bit of controversy about this style of bonds. Some people thought they were very risky. I don't think they're risky. These are fixed rate bonds. They're not, they're not a variable rate bond where something could happen when the rates all of a sudden change 2 years from now or 3 years from now. The rates are locked in, just like the other bonds. They're a lot less common. They're not used as much. Like I say, I think we talked about way back early in the process. Typically, a lot of times it's districts like yours that are fast-growing districts that are trying to control tax impact in those first early years that use these. But we were a little bit concerned, initially, since they're not sold very often, about, how much market interest would there be and how many bonds, how many bidders would we get? If you look at this, excuse me, we actually got 7 bids. We got one more bid on the cabs than we did on the serial bonds. So there was a lot of good market interest in your bonds. The other thing about this, on the cabs, compared to what we had for the pre-sale or the early numbers on the election, we had $6.3 million less in interest and almost $9 million less in principal and interest payments total. So, again, a great result here on this one. Again, we had projected at the pre-sale rate of about 3.35, and we ended up with 2.766. So, again, great results on this, and again, combined with the other one, significant savings for your taxpayers. So we're very happy about that. If you look, you can see, again, here's the bids from this one. The winning bidder was Wells Fargo, bidding out of their office in Charlotte, North Carolina. Piper Jaffray also bid. Morgan Stanley also bid. J.P. Morgan and Hutchinson Shockey out of Chicago. So, again, a lot of interest, and that's a good thing. We like to see competition when you're selling bonds to make sure that you get the best interest rate possible. So that worked out very well. Again, then on page 4 of the attachment, you can see the amount available for the project fund is about $42,600,000 roughly, and that doesn't count any interest earnings. If you go back to that earlier one we looked at before, there's some interest earnings built in there as well. So you can see the total interest. And then the last page is, again, the principal and interest schedule. and there's no payments until starting in 2022. But you can see very nice low rates here, and again, those rates are locked in. They're not variable, so these are very safe. And we've combined those with the others to control the tax impact, as you saw on that chart that shows the bar graph of the tax rates over the next 20 years. So, all in all, I think when you take the two together, I think it worked out to be a very good thing in terms of getting the money you needed for your projects, and also controlling the tax impact as best we could to help your taxpayers out. So I think all in all, it's a very successful process, and congratulations.
Are there any questions? Mary?
In not knowing how this works, since we're not going to be building everything right away, how does that affect our interest earning, our taxes paid, et cetera, when some of this is going to sit
The
in the fund?
taxes
and earn
paid are
interest?
based on the payment schedules here, so your
Okay.
taxes are paid on that. Now, if you go back to the first bond issue and you look under that table, it's called sources and uses, you'll see some estimated in the one that's a Excel spreadsheet. It's on the 2000A on attachments page 5, it looks like this. You'll see up at the top, we've estimated some investment earnings. Because what will happen is now, we'll sell the bonds, they will close, you'll get all the money in one big chunk up front. Julie then has the option, has the ability to invest that money, because obviously, it's gonna take you a while to spend it. So what she will do is, she'll work with your investment advisor person, and they will put together, they'll look at the draw schedule about when you estimate you're gonna be spending that money, and they'll set up investments to mature at about the right times to try and maximize, some of it as long as possible, and some of it you need right away, and then have to put some in shorter term. But they'll set up what, they typically call that a laddered portfolio, where you have a little, you make the investments so that, time it so the maturities come in when you need to pay the bills. And so you will have a significant amount of chance to earn interest as a result of that. It's not just gonna sit there and, do nothing. You'll be able to invest it right away.
Rich,
Continue.
just out of curiosity, and not aware of how this works from the bond market in general in the interest portfolio, but do we pay additional taxes on the interest earned then when we draw it, or how does that work?
No.
Okay, so it's just, we make money off of the
There's
investment
limits
of
as
these
to how
bonds.
what the IRS does is you're borrowing on a tax exempt basis.
Right.
So they look at your interest, and you can't earn interest faster than you're paying interest. That's what's called positive arbitrage. In other words, if you were borrowing at 3% and paying it and investing at 5%, they wouldn't like that, and they would make you rebate the difference over that you're earning. So there are a bunch of calculations that have to be done by and typically the people that you invest with will do those arbitrage calculations for you. So there's limits as to how much you can invest, because they don't want you borrowing at a tax exempt basis, investing on a taxable basis and making money. But at least what this does is at least covers, gives you additional dollars. And that was built in from day one when we sized the size of the bond issue. We made some assumption about interest earnings. And again, this is just an estimate at this point. Julie, once you get your, a good draw schedule from your architect and engineer, she'll work with your investment person to come up with a plan. And what we try and do in this is try and make sure we're a little bit conservative, so that you still have the right amount of money to invest.
Okay. Rich, if I,
One quick
who is our investment group?
Currently, we use Minnesota Trust.
Okay.
I have a kind of a general statement about this. Thank you for doing your due diligence in this and working hard for it. But I'd also like to commend this board. I know when Rich and I and Stacy got on the board, Lee was here at the time, we were in basically debt. We've now come up to the positive fund balances, which have created the excellent credit rating which we've received in this district. And Julie's done a great job in keeping us, and Terry too, keeping us honest in what we can do and what we can't do at this district. There were a lot of sacrifices made by former boards. I commend them for what they did to set us up. But I also commend this board for what we have done to create this positive outlook for our community. So thank you to Julie. I know she's not here tonight, if you'll pass that on to yourself, and thank you to the board.
I'll say something here. Regarding Mary's question about the arbitrage, we did discuss this during the Facilities Committee, and there are two options for that. We can hold that as a contingency cost overrun fund, or the board also has the ability to use that and refund that back to our taxpayers if the board should decide. So any additional money we earn, that can be forwarded back to, or rebated back to the taxpayers. I, too, would also like to thank you and all your hard work at Ehlers, and I would like to thank Julie and her staff. It's because of Julie and your work that our district are wise financial stewards of the money that's given to this district by our taxpayers. We are on sound financial operating conditions, and that's shown by the fact that we still maintain our AA2 bond rating and really able to save over $13.5 million in the cost of these bonds. And this should be an indication to our stakeholders and our community residents that we as a board and as a district always work in the best interest to lower the tax impact to our residents. This is not just a validation from the board here, it's a validation from national experts and bond people whose job it is to assess the financial risk of this district. So it's a validation of the performance, the wise financial stewardship of this district from national experts. So again, thank you to you and to Julie and her staff. So, are there any other questions or comments? Seeing none, this is a resolution. So individual roll call vote.
Aye.
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 That passes 5-0.
Thank you.
Thank you very much.
Now, my understanding is you're going to break and then go into a special
We
or
will
work
call
session.
for an motion
So
for
if- if
adjourn.
you-
We will
if you
take a
have time
10-minute
for
recess
the
and
chair,
then
the
we will
clerk,
sign
and-
the
or
document.
acting clerk and acting treasurer, if I could get some signatures, that would be wonderful.
We will do that post haste.
Thank you.
With that, do I have a resolution for the, or motion for adjournment of the meeting?
So moved.
By Ben, do I have a second?
Second.
All those in favor signify by saying aye.
Aye.
All those opposed, that passes 5-0. We will take a 5 to 10 minute recess here to sign the documents.